In this video, we discuss one of the most popular questions that we've been receiving. In fact, this one came straight from a client via email asking us what they should do with their real estate and investment portfolio with the looming tax hikes and the potential for inflation. And then in the big bonus question that they had is, do we expect real estate prices to crash anytime soon because of inflation? This is a great episode, and Justin actually caught me by surprise right after finishing a board meeting. So this is a great one for you to see. Hey, Justin, what's up?
Hey, what's going on? What are you? Whoa, where are you at?
Well, I just got done with a board meeting, and I'm just here in the boardroom. What are you doing?
Man,
you should be golfing.
No kidding. Jeez, I'm jealous. Well, I'm glad I got you. We got an email today from a client, and I wanted to ask this question to you. And because you've over the recent weeks you've answered it like a million times to some folks. So if you got a moment,
yeah,
what do you think?
You want to do it now?
Yeah.
Okay.
I mean, I'm working.
All right. Well, I need to get a little. You're lucky you didn't catch me during my towel change. So I got to get a little more appropriate. So let's see here.
Well, let's not scare these people away. All right.
Yeah. Well, I didn't expect all this excitement here. So we'll just, but we're always prepared here at Quiver Financial. So we're ready for this. So this question came from a client.
Yeah. Yeah. Okay. While you're doing that, I'm gonna go ahead and pull it up here so I can read it off to you.
And it's been a popular question, right? Okay,
yes.
Gotcha. I see here. All right. We got a popular question from a client. They don't know we don't work on Fridays, huh? Okay.
Not today.
How do I look? Am I all right? Are you ready for this?
It actually looks quite nice. Where's your tie?
Yeah. Well,
doesn't that work with your wetsuit?
It's funny. COVID got rid of all ties. I'm lucky I even have this coat right at this moment.
So, we had it next to one of your wetsuits in there.
Oh, boy. It looks like a really long question. All right. Well,
it does. All right. Well, I'm going to go ahead and read it off to you. And I got a few things highlighted here. So we'll kind of focus on a few different key points that, within this question. So
all right,
here we go.
Let's do it.
I am concerned. I am concerned now that I am retired and on a fixed income that the looming tax hikes and inflation are going to erode my net worth and purchasing power. As you know, I own rental real estate as well as stocks and bonds, and I'm worried that if real estate has a crash from rising interest rates at the same time taxes go up, or worse, they would get rid of the capital gains tax and I could be stuck with higher taxes and a depreciating asset at a time I need stability. These things have me worried and wondering, what should I be doing? So
that's a hell of a question.
You talked about this quite a bit, but
wow, yeah, there's a lot in that question. What do we got? Inflation,
all right,
tax hikes, we got real estate. Wow, okay, yeah, that's a great question. That's been one of the. I can't tell you how many times I've heard that question in the last 3 weeks. So this person's got great timing.
They do. So here we go. I got this first one highlighted, and it's.
I bet you know what. I bet I know. I bet I know who this client is. I mean.
Oh, absolutely.
All right. Yeah, I think I know who these are. I bet I can. I probably shouldn't say who it is, but nonetheless. All right. So the first question is looming tax hikes. I know I've been reading that everywhere. We've even used it a few times in some of our marketing because we know it's hot topic in the press. Yeah, it's a narrative that gets people's attention for sure. I always, tax hikes are not all the same. You have to remember, we did live with Obama for 8 years, and there was tax hikes during then, and we survived. And even the Trump tax changes, while they helped some, they hurt others. There was actually some wealthier people with real estate and things like that weren't really happy with some of the Trump changes. So not all tax changes and tax quote unquote hikes are equal. So you really have to wait to see what the final tax package is before you can really start to do any planning. So what you should be doing is exactly what this person's doing, is ask questions and stay aware, be in contact with your accountant, be in contact with your financial advisors, be talking about these things. So that way, when they happen, you'll have a plan in place. So right now it's be aware.
Yeah, I agree. All right, so here we go. Inflation going to erode my potential net worth and purchasing power.
Sure. So, you know, in 08, when the Federal Reserve added tons of debt, you know, through 2009, 10, 12, in order to get the economy going, there was all kinds of newsletters and subscriptions out there saying inflation's on its way, all the government debt. And, you know, what we experienced, no inflation. Now, it was sneaky inflation. And so all inflation is not the same. And so if you have certain kinds of inflation you can live with, there was a day we used to pay $5 for a lunch. We now pay 12, right? So inflation is not equal in the storyline. And so right now you have to really look at how that inflation is, because there's a difference between wage inflation, which is really sticky. And if that happens, then yes, us as consumers are going to see higher prices. However, there are transitory inflation things like energy and food that can come and go. Like, for instance, when COVID first hit, you saw a very big deflationary or drop in prices of energy and food, very short period of time. And now you've seen a rise back or inflation in those things, and they're in the numbers. And so a lot of it depends upon how long it lasts. If it's just for a few months, not a big deal. But if it's there for many, many years and we start to feel like the 70s, then it's going to be all about your assets. What assets do you have that you can move around to make sure that you can offset that inflation? So, yeah, which I think they mentioned so thank God they told us about their assets, right? Because
exactly.
In order to really answer the inflation question, knowing that somebody owns real estate as well as stocks and bonds really helps helps us tell them, hey, are you screwed or are you okay? Because the reality is, if you own rental real estate and you have, let's say you even have sticky inflation like wage gains, then the assumption is going to be you're going to be able to also raise rates. If people are making, raise your rents. If people are making more money, assumption you can raise your rents. So you actually, in that particular situation, could have an offset for your inflation. And then a lot of times, people never tell you all the good things. I mean, what if this person owns a home and they're with a mortgage, and in the last year or two, they were able to refinance at a lower rate? Well, guess what? That was actually a good deflationary thing in their life, and they probably forgot about it. They're so focused on, the fear that they forgot some of the good things. So in this particular situation with real estate and then also stocks and bonds, you could address both. If you can raise your rents, you're going to address the sticky inflation of wages. And if you can adjust your stocks and bonds for a portfolio that does well with commodity inflation, there's ways that you can do that, then you're able to arrange your assets. And now you'll have to do it in a different way than people have done it for the last 10 years. So it's going to be a new way of investing for people. But if these things were to happen, at least this person has the assets to offset the risks.
Yeah, definitely. It helps, the rental income can be a huge bonus.
Who it's really hard for is the people who don't have assets. It's really hard for, people who are living paycheck to paycheck. That's the ones that get hurt by inflation.
Yeah, absolutely. Especially with their income staying the same.
Yeah.
Okay, here we go. Real estate has a crash or rising interest rates.
Yeah, I think this was like one of the most popular search terms recently is, when is real estate going to have a crash? Real estate, you have to remember that the residential real estate is really about interest rates and employment. And so here, if you have a situation where you're thinking, hey, due to inflation, you have rising interest rates, which causes the real estate market to crash. Well, it all depends on how. If you have February, which we had a very big increase in interest rates in February, if you had that happen multiple months in a row for a period of time, yes, then this would be an interesting question. But historically, that's never happened. And so I don't like to bet on things that are outliers. You can't plan your whole life around. It's hard to make money if you're always thinking about the next crash. You have to look for the opportunities. And the reality is, in the data would tell you that if interest rates rise in an organized fashion, and let's say you have inflation that's pushing wages higher, as long as people aren't losing their jobs, you have a really interesting setup in real estate where you have a bunch of millennials hitting the age of getting married and buying houses, and there's not enough houses in the US for that demographic. And then you have a situation where the current real estate's in very sticky hands. So you could have a very heavy demand scenario. And if the inflation is the right kind of inflation where wages are rising, well, then even as interest rates rise, it'll be able to offset itself. You may not have the froth in the real estate market like you've had recently. So if you're a flipper or you're going for fast money in real estate, yeah, you should be really concerned. You should be very careful here. But if your time frame is longer, you should really look at the bigger picture of what's happening in demographics, and also just look at the data of how the world has worked over time. So I would stay very aware. I would keep asking the question. I would be aware of it. I'd really be watching what happens in interest rates and how they move. And I'd be talking to my advisors on a regular basis about if these things happen, what do I do next?
Yeah, and making sure that the jobs are continuing to grow and not our unemployment doesn't start to come back.
Yeah. All right. Well, good.
They can't afford their new homes. It's no good to anybody.
What else did you find in here? Did you find all kinds of good
I could get stuck with higher taxes and a depreciating asset. Excuse me.
Okay. Yeah. So I mean, back to the real estate side of it and higher taxes. Here again, I mean, we don't know if you're going to have higher taxes and if it's going to really affect this particular person, or is it, where is this person's income? I don't know if they're one of those high wage income earners that's going to be affected by it. So there's a little more information would be needed there. And there again, pay attention to what the tax bill is really all about. And a depreciating asset, we're making a very big assumption there. So when I see wording like this, I could be stuck with higher taxes and depreciate. These are a little more emotional than what reality probably is. So I would say to anybody who's feeling this way is that a lot of people are feeling that way, but there's still a lot to see. And like I said earlier, in this particular situation, this person has the flexibility to move assets around to adjust for these things.
Yeah, and I think it kind of comes down to possibilities and probabilities. However, a possibility could become a probability, but I think, like you mentioned, for now, probabilities look towards. It seems to be a little bit more of an irrational thought, or a thought of a little out of the ordinary for this person.
Yeah, you bring up a good point. There's all kinds of possibilities, but you can't live your life in all those possibilities. You'll go nuts. So you have to look at those and narrow them down to what the probabilities are, and then look at the data and look at the experiences and understandings that you have from the past. And that doesn't always guarantee that you're going to understand what happens in the future. I rarely understand what happens, but nonetheless, you can at least reduce the emotion, because emotion is what causes people to do things that they regret. Because when emotion comes in, you fire off parts of your chemistry that really aren't useful for the brain. So, keep doing your homework, keep asking questions, keep getting advice. That's the best thing people can be doing.
All right. Well, I mean, those were the points I wanted to touch on.
And they asked what should I be doing? Exactly that. Ask questions. In fact, they should attend the next event that we're going to cover all this subject matter, called Protect Your Portfolio, on April 29th. If anybody's curious about this subject matter, what's going on in real estate, inflation, tax hikes, how do I insulate myself from these things? This is the kind of event that they're going to want to see and watch. So it was a great question and good timing for it. So on Monday, Justin, let's reach out to who that was and give him a big thank you.
Yeah, absolutely. We will do.
All right. So can I get back to surfing and you could go golf now?
I guess so. Maybe you should how about you get back to work and I'll go golf?
All right. That sounds fair enough, man.
All right. Well, until
weekend.
next time.
All right. Have a good weekend.